Hi, I'm Jody Ellis and I'm here talking about the shape of the market for the end of November, which has a particular shape, not only for the fact that November is a particular time, but also after the US elections. Sorry?
Alright, just click on that to change it.
Yeah. a bit of technical advice from the side there, and I hope you appreciate my lavender shirt. I was getting a lot of flair off the clothes I was wearing, and we had a colour consultant come in and say I should be wearing lavender. So there we go. It looks like white to me, but on the screen there. But this is the only lavender shirt I've ever owned in my life, and I'm doing it for you. Okay, so I'm Jody Ellis. I'm authorised as a representative under FSGA. I'm a licensed broker and financial planner, and I have no retail clients. I'm an active trader. This is a no advice session. The presentation is produced relating to what I'm going to do in the upcoming scenarios. I'm offering my opinions on recent events that may have alternative opinions, and there may be people out there that contradict my opinions. It's just an opinion. If you're seeking to replicate my trades, this may not be appropriate for you, and you should seek financial advice before taking a position in the marketplace. And no warranty or guarantee is given by our sponsors or Investor Centre, and we're not liable to any person for any loss or damage arising from the information presented. Okay, so attending this presentation, you accept full responsibility for any action that you take in the marketplace. Just wrapping up a couple of the trades. Most of the information is on the previous trade, still on our Facebook. We made our 40 points on the Melbourne Cup trade. This was not the Trading Tigers trade. This is a replication of the Tigers trade. The Trading Tigers this year made 140 points in 2 trades. The gold trade that we did netted us about $38 US as a victory, and I've come out of the China trade. I made about 400 and something points, 418 or something points, but if you're still in it with the 750 point target, there's nothing wrong with that. You just sit tight. You just need to run that through to December. The China A50 will be sitting relatively flat this week and will commence its up run again next week. Okay, so we need to wrap up the US election, and Biden won, and it was pretty much all over Red Rover when George Bush, who's pretty high up there in the Republican royalty, he rang Joe and said congratulations on his win. And this is why Donald Trump, he's trying legal action to overturn the results, but he's not doing it with Republican party funds. He's doing it off his own bat. The reason is that the Republicans have already conceded that Biden won the election. Now, there's a couple of things that can still change. The one that is of some concern to some people is an act of war committed on the United States. And the Constitution in the US is a bit muddled in this, that if America goes to war, the sitting president would remain the sitting president. And so you might be hard pressed to get Donald Trump to come out in January if somebody attacks America before that time. Now, it doesn't go the other way. Donald Trump can't declare war on somebody. That has to be ratified by the Congress and the Senate for a declaration of war. But if somebody does a Pearl Harbor, that's an automatic declaration of war. So if China attacks America somewhere, then Donald Trump might stay in. So we say the winner. The winner is Joe Biden, but actually the winner here, I feel, is Kamala Harris. And the talk from the United States, from people I speak to in the government over there, is that they're already preparing for Biden to drop out relatively quickly. Before, I think I said in the last talk, before June. They're saying before September 2021, they're expecting Biden to step down due to ill health, and Kamala Harris will be the first black female president of the United States in that instance. So once again, Biden not expected to finish his term, and Kamala Harris expected to be the president of the United States for the term. We're going to talk very quickly about a couple of recent events, and I'm just going to draw you a timeline. Now, on the 19th of October, Australia announced it will be joining the Q4, US, India, Japan, in major military exercises in the South China Sea. And China lodged a complaint in the UN about Australia participating in that because it wasn't involved locally. And the Chinese have been very upset with us about this whole Q4 thing ever since, blocking our coal, our iron, our barley, our lobsters, even, and not being able to unload them at port, not being able to import them, etc. Now, on the 30th of October, excuse me, the Australian government commenced negotiations with Japan for a new joint defence pact. And on the 13th of November, Australia concluded that defence pact with Japan. We are now, if somebody attacks Japan, Australia is going to go to their aid militarily. And this has not been a very impressive thing for the Chinese government. And on Saturday the 14th of November, the Chinese consulate warned Canberra that there will be serious consequences for taking up the defence pact. Now, as it so happens, on the 16th of November, the ASX had its first outage in 4 years from a DOS attack on its servers. It was reported as a software upgrade glitch, but just talking to some people in the stock exchange, they had, it wasn't a hacking attempt, it was a bombardment of data on their servers that completely started to drain their bandwidth, and they realized they were susceptible to it. They shut down the system and stopped it from completely overloading the system. Now, this isn't something that a couple of school kids can orchestrate. This is a significant attack on a huge institutional organisation with an enormous amount of resources to stop this. So it was a big event for the ASX, and it dropped the ASX. It didn't stop. It couldn't trade all day and didn't start again till the following day. On Wednesday the 18th, it didn't seem to get a lot of press in Australia, but it was a major event. The National Australia Bank received bomb threats, and the ASIO advised that they were very serious, and in response, the National Australia Bank closed its branches Australia-wide, and all internal ATMs and everything were all closed as well. So they're writing it off as a bomb threat hoax from a couple of school kids, but you don't shut down the entire National Australia Bank banking system in Australia on the basis that a couple of school kids have said something, and ASIO's come in and said, take this very seriously. So that's what happened. Now, I'm going too far. If we just put a couple of dots together here and we say the Chinese have told us they're really very annoyed with us, and then on Monday the ASX gets shut down from a huge attack, and cyber attack, and then National Australia Bank receives some sort of serious attack on it based on some sort of bomb threats or something, and it's shut down. Now, you can look into it over the next week or so. They are not the only financial institution that's had problems this week. There's been a couple of other major banking organisations that have had major idiosyncrasies occur that have disrupted their service, but there hasn't been a lot of press about it. I'm not sure whether the press are being told to ignore it or the press are just oblivious to it. But either way, it'll come out over the next week or two and you'll be able to see what's been going on in the banking system. Very interesting. Now, perception and reality. In the stock market, there's perception and reality, and a lot of us feel that the stock market is fundamentals and technicals to a lesser extent. It's driven by PE ratios, by whether a stock is good value or bad value, what news is coming out on the stock, etc., etc. But the reality for me is that the stock market is people, and people are perception. Anytime there's a perception of something, you don't let the facts get in the way. Now, the perception at the moment is that the pandemic has broken, the market's moving up, we've got vaccines, everything's under control, and we're coming out of the COVID event. The reality of that, when you read into it, is substantially different to that. But once again, I'm not here to say, what the hell, why is everyone responding like this? I'm here to say the market, as you probably saw in my first talk, the market desperately needs a placebo, and they desperately need to be able to say it's over, whether it's over or not. And the fact that it's not over is irrelevant. The perception is everything's getting better and that the market is continuing to rally. We have a look at that again in a few minutes. The important thing about perception and reality is, you go, but business is down, the retail's closing, the blah, blah, blah. Don't overthink it. The perception is we should be going up, things are good, and don't let the reality of things get in the way of it. Now, this is the US pattern for the election, and up into January, down into March, up into the beginning of June, flat across there, down into the election week, and then up to a new high after that, which we've already done, and that runs all the way traditionally into January, and then we go down into March 2021. That's the US election. When I did that's the frame from the US election pattern, and so far we're about here. All right. Now, this is a frame I did from February for the Queensland Investors Club, and this is SARS in 2003. And SARS was never cured. It was never found. A vaccine has never been found for SARS. But on one day in March, the market decided that the SARS pandemic was over. And so there's January, the market fell. March, on that one day, after that, it went up, came back down into July, then went up, dipped down into September, and then raced away into December, and fully recovered the entire, from the high down to the low, back to the high again by December. That's 2003 and the avian flu pandemic and SARS pandemic there. Now, this is us, and the market has fallen in January turned around in March, it's come back up, dipped down into July, gone back up into September, come down into October, and it's racing away as we speak. We're about 3 weeks behind. I'll just drop back to the 2003 event. We're about 3 weeks behind this one, which puts our high here going into January. But everything else is pretty much the same. And it's an amazing remap of the entire event from high here back to high. And so we're expecting this high here to come up in a relatively short amount of time. Now we're talking about an 8% or 7% capital growth in the marketplace. That's a lot. So, people are saying, what should we do? What should we do? And asking me, and I'm saying, go long and win, and be prepared to sit on it for a relatively long time, all the way into February next year if you need to, and then watch out for March because everything's pointing to a pullback in March next year. Okay, Thanksgiving. So we're in the Friday before Thanksgiving now. We're coming into Thanksgiving next week. It's a major financial holiday for the US market, and it's traditionally a major financial markets event. So if we take the last 10 years, the market has risen into Thanksgiving 8 times out of 10. And in 2018, it didn't do it, but the US Federal Reserve was releasing stocks, New York stocks that it had acquired in the quantitative easing segment. So it had commenced quantitative tightening and didn't do a very loud announcement about that, and drove the world markets down into that entire period. That October, November, December 2018 was just a shocking downtrend for the marketplace. And then in January, they said quantitative tightening is affecting the world, and they commenced quantitative easing, and the market shot straight back up again. So that's the last 10 years and of Thanksgiving periods. And the little red arrows, you can't see them very well, the little red arrows are the Thanksgivings, and the market goes up into them 8 times out of 10. I think 4 times out of 5. If we go back for the last 30 years, it's still very consistent. 71% of all years, Thanksgiving goes up. Now we combine this with US presidential election years, and November has a higher high than October in virtually every US election, bar 2. And so once again, we're go long and win at this stage. Now we go long for Thanksgiving. This is an actual trade. So on the Australia 200 CFD, we go on Monday at 2:30 p.m. and we run it all the way through to Friday at 12 p.m. next Friday. So we target 100 points on the Australian market. The stop is 100 points. Historical accuracy is 76%, and we can divide our account by 500 to work out the number of contracts. So if I have a $10,000 account, divide it by 500, I'll do it with 20 contracts. And 20 contracts for 100 points is $2,000. So we're risking $2,000 to make $2,000. Now, it's important because I get Tigers giving me a call about this and say, this is not the same as the Trading Tigers trade. The Melbourne Cup trade was not the same as the Tigers trade. So you're not Tigers, you haven't had a lot of training, and so this is for the retail market. If they want to try this with a couple of dollars, feel free, and I'll actually replicate this trade myself. And the Trading Tigers have a different trade. This is still a good trade. The Trading Tigers trade it's a little bit more lean, mean and keen, and that's the nature of these trades. So the you can give that a whirl next Monday. You can follow me on Twitter. Now, Twitter's changing. I've heard that Twitter is going to change to only storing data for the last 24 hours, and that greatly reduces the benefit of Twitter. I was using Twitter to have historical references for I said this on this date, I said this on this date, and that's really not going to work for us. So at the moment, I'm still putting up a little bit on Twitter, but we're probably going to go more to Facebook. I've been talking to Stephen about it, and so the Facebook things stay there forever, and we're thinking about changing that from Twitter to Facebook. Global Reporter has done very well with its stock tips. That's just finished its audit back in last month for the year period with a 2,200% return. Day trading is also doing very well. So it starts with a $10,000 account in January. It's had about a 500% increase in value, and that's continuing. And there should be one more. But there isn't. The Trading Tigers. I'll just talk to you about that for a second. So Trading Tigers is a limited intake. We have about 400 clients in Trading Tigers, and you can join Trading Tigers, and we do 20 to 30 trades a year using what we call behavioral mechanics. We're not looking at fundamentals, we're not looking at technicals, we're not looking primarily at indicators, we're looking at the behavior of people around specific events. And as you see, you've just seen with a lot of these trades, the gold trade and the Melbourne Cup trade and everything, they just are not affected by local news. The market has behaviours, and it continues to execute those behaviours, and we prosper from that. If you're interested in that style of trading, we go through in Tigers and explain to you the rationale behind the trades and everything, and you can contact Trish at Investor Centre on 1300 132 999, or you can send her an email, admin@investorcentre.com.au, and get a bit more information about Trading Tigers. That's it from me, and I'll have a wrap up either late next week or early the following week, and we'll see how we've gone with the Thanksgiving trade. Thanks for watching.